Hello investors, can you imagine a company that dominates e-commerce and financial services across all of Latin America? Today we're going to dive deep into Mercado Livre, ticker MELI. Mercado Livre is much more than just a shopping website. It's a complete ecosystem that has changed how millions of Latin Americans shop, sell, and handle their money. In this video, we're going to look at MELI's business model, its plans, how strong its money situation is, what makes it better than others, the risks, and how it uses its money. Is it worth putting your money into? Stick around to find out. Business model. So how does Mercado Livre work? At the heart of it all is the largest e-commerce marketplace in Latin America. Think about it. Over 218 million active users and 1 million sellers spread across 18 countries. But it doesn't stop there. MELI runs a bunch of businesses that work together. Mercado Envios. This is for shipping and logistics. Mercado Pago and Mercado Crédito. This is their powerful financial tech part, offering payments and loans. Mercado Clicks. This is their advertising platform. Mercado Shops. These are ready-to-use e-commerce solutions for store owners. They make money from fees on sales, advertising, processing payments, subscriptions, and interest from loans. It's a machine that creates value in many different ways. Business strategy and outlook. Mercado Libre's strategy is clear: to be the complete solution for commerce and finance in Latin America. They built an ecosystem where each part strengthens the other. The marketplace is the foundation, supported by payments, loans, cutting-edge logistics, and an increasingly strong advertising platform. Just imagine, almost all of the platform's sales volume goes through its own payment channels and is shipped by Mercado Envios. This solved two of the biggest bottlenecks in e-commerce. They follow in the footsteps of global giants. They attract users with shipping subsidies and rewards, like in the MELI Plus program, and offer sellers a simple interface. The goal is to increase loyalty and reduce incentives for sellers and buyers to seek out other platforms. The outlook is exciting. The platform's monetization is expected to increase, especially with advertising. The expectation for fast deliveries, greater use of their fulfillment centers, and the expansion of credit for small merchants should make MELI's services increasingly essential. Also, the company is starting to explore the connections between its services, like offering rewards in the marketplace for Pago credit card users. This vision has everything to deepen their competitive advantages. Financial strength. And how's the cash flow? Mercado Libre's financial strength is considered solid. At the end of the fourth quarter of 2024, the company had about $7.1 billion in cash and investments, plus access to a $400 million credit line. This means it's well-funded to meet its short-term obligations and pay for its investment plans. Historically, MELI prefers to get money through selling shares, and that should continue. Even though it operates in countries with tough credit ratings like Brazil and Argentina, which bring in 70 to 75% of its money, the market trusts the company. Their convertible notes due in 2026 and 2031 have super low interest rates, which is a great sign. Even though the planned investments until 2029 are big, around $6.8 billion, the current cash and issuing secured debt seem more than enough. As investments settle down and the company makes money from its platforms, we expect the free cash flow to grow much faster, possibly going over 8% of sales by 2029. The forecast for average company debt compared to adjusted EBITDA also looks very manageable. Competitive advantage. E-commerce is a battlefield, right? Low barriers to entry, easy price comparison. How does MELI stand out? It built what we call a wide economic moat, meaning competitive advantages that are hard to beat, which should ensure above-average returns for at least 20 years. 1. The main source of this advantage is the network effect. The more buyers on the platform, the more sellers are attracted, which in turn attracts more buyers. It's a virtuous cycle. About 33% of Latin Americans transacted through Mercado Libre or Mercado Pago in the last year, and the company has been effective in monetizing this network. 2. Intangible assets, mainly data. MELI has a treasure trove of data on e-commerce transactions in Latin America. This allows for better sales forecasting, search optimization, and more efficient credit underwriting. It holds more than 28% of the Latin American e-commerce market, surpassing local competitors by a wide margin. 3. Logistics. Mercado Envios. With over 1.8 billion items shipped in 2024, MELI has developed an impressive proprietary logistics network, reducing the average delivery time to about a day and a half in many cases, much faster than traditional postal services. Investments in automation are further increasing this efficiency. 4. Payments, Mercado Pago. It processed $197 billion in 2024. This reduces friction in transactions and allows for smarter credit offerings. 5. Switching costs. For sellers, especially small and medium-sized ones, leaving the platform means abandoning management tools, advertising, and crucially, a large customer base. For buyers, the convenience, the benefits of MELI Plus, and the integration with financial services create an inertia that keeps them on the platform. The company benefits from trends like the digitalization of payments and the increasing internet penetration. And it's not standing still. It adapts global innovations and constantly seeks to improve the user experience. Risks and uncertainty. Now, it's not all sunshine and rainbows, of course. Investing in MercadoLivre comes with what's considered a high level of uncertainty. Why is that? First, their products and markets are changing really fast, and the company is sensitive to how the economy is doing overall, especially since a lot of its money comes from growing economies. On the shopping side, MELI depends on how much people are buying things that they don't necessarily need, like clothes and home decor. There's a lot of competition, and they have to spend money on coupons and shipping discounts, which can affect how much profit they make. In the financial world, Latin American banks usually make a lot of money, which brings in a lot of competition from new financial tech companies that want a piece of the market in loans, payments, and other services. Finally, one risk related to environmental, social, and governance factors is managing their employees. Finding and keeping talented people in technology, especially developers, is a constant challenge in Latin America and can affect the company's ability to create new things. Capital allocation. How does MercadoLivre decide where to put its money? The company gets top marks for how it handles its money. This means they look at how healthy their money situation is, where they can invest, and how they share profits with their shareholders. The management has put a lot of money into their delivery system, Mercado Envios, and that's been super important. They even cut back on paying out profits in the past to focus on growing and building their whole system. This is a lot like what Amazon did, and it's all about growing big in the long run. MELI has been quick to react to other companies, investing more where they need to, like with their MELI Plus program and working with grocery stores. The company also shows good judgment, like when they slowed down giving out new loans when interest rates were high in Brazil. In the future, expect more money to go into their advertising platform, delivery centers, and the Mercado Pago brand. As there are fewer new places to invest, there will be more pressure to give money back to shareholders, maybe by buying back shares starting in 2026. For now, keeping their cash seems smart, especially with all the great chances they have to invest and get big returns. Conclusion. So, to recap, MercadoLivre is a company with a strong position in the growing e-commerce and fintech markets in Latin America. Its business model is strong, with a group of services that help each other grow. It's financially stable, has a big economic advantage based on network effects, data, logistics, and the cost for customers to switch, plus smart spending that helps it grow for a long time. Of course, there are risks, like how sensitive it is to the economy and strong competition. But MELI's past and its plans show it can keep growing a lot. For investors looking for a leader in a region that's becoming more digital, MercadoLivre is definitely worth a closer look. This was a quick look at MercadoLivre. Remember, this video is for learning only and isn't advice on what to invest in. Always do your own homework. What do you think about MELI? Leave your thoughts below. If you liked the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on notifications for more deep dives like this one. Thanks for watching and see you next time.